Good morning, I am Adam Harris, and this is the day ahead. Aside from CAD news at 1:30 p.m, we have OPEC meeting today, and in currencies, is there a weaker US dollar on the cards for the next few weeks? The cryptos are languishing in no man's land for this week, and in commodities, platinum is our favorite for shorting. In the global indices, how the week finishes today is important, and in equities, everything appears to be in order. Don't forget to click on the time link in the description below to jump to that chapter. Good morning, and it's Friday, June the 22nd on the economic calendar. We really are going to be focused predominantly around the CAD charts at 1:30 today, just to see if there's any increased volatility there. And also just being aware that OPEC are meeting today, and therefore there may be some impact on the oils charts. And so let's go ahead and we'll have a look at those and see if there's anything we can expect, at least from a technical basis. On the currency charts, and starting off with the US dollar index, bit of a bearish reaction here at the moment, so likely to see a retracement back down into the buy zone. Moving on and having a look at euro dollar, what we do have, and what's worth noting, bullish candles combined with bullish divergence here, both of the indicators looking as though we are overdue for a weekly retracement. So the expectation at this point is to see price attempting to move up towards 1.18, and if it breaks through that, we'll start to see it heading up towards 1.2 and potentially as high as 1.22 in the coming weeks. So we'll keep an eye on that. The same thing with the cable here. Strong bullish candle, bullish divergence across the board, likely to see this head up to 1.34. If it breaks through that, we could see ourselves going as high as 1.38 even in the coming weeks. So we'll keep an eye on that, but that is the expectation at the moment, likely to see a weekly retracement on that from a technical perspective. Pound yen, a couple of the yen charts being very passive aggressive meant this week my expectation is that we're going to continue to trend to the downside, and they seem to be pulling back in. However, with pound yen, for example, here, we may find that ultimately does unfold next week. We're pulling into these weekly lows, looking for a bearish candle, but I'll be following up on that next week. And also on CAD yen. CAD yen actually managing to trickle down a bit slowly, but also same thing again, a sort of a move down, back up, sort of two steps down, one step up. So keeping an eye on that. Expectation should be for that to continue. And then dollar CAD finally now starting its swing high with a weaker dollar here. Makes sense that we'll see price retrace back down into the buy zone, at least down to 1.32, offering us a very nice swing trade opportunity to the upside next week. That would be the expectation from that, at least from a technical basis, this trend looking really nice and healthy. On the cryptocurrencies, and I have left it for a couple of days because first of all there doesn't appear to be a clear trend. We do appear to be now in the sell zone. We've gone into an uptrend. We haven't closed this gap on Bitcoin, and now actually looking potentially as though we're going to move to the downside. So no real opportunities there at this point in time. The same thing looking at Ethereum, no real clear direction. Not sure if this level will hold, but certainly not trending either way up or down. And Litecoin looking actually just very, very bearish at this point in time, looking very much intent on moving to the downside. So generally speaking, cryptocurrency is not really offering any technical trading opportunities there, and actually looking slightly weaker, definitely looking more bearish than bullish. In the commodities, and starting off with the metals, looking at gold in particular, we had a bit of a bullish candle yesterday. As I said, we are heading into this level of support, so we may well find that we do bounce back next week. However, that is yet to be seen. Having a look at platinum, platinum is definitely the most bearish of the bunch. Strong trends to the downside. At this point in time, it's very good, I think, in terms of technical intraday trading opportunities to the downside. Not really seeing any reason why this should change. The momentum indicator is very nice and bearish. Likely to see this continue. May even see a pullback next week with a swing opportunity to the downside. So currently expecting platinum to continue to the downside. Certainly sensitive to these trade discussions. UK crude oil finding a bit of support lower down. So just noting that we've just got quite a few lows in this area. What's happening is we've got a real mixture of bulls and bears, and bulls keep coming in trying to push it back up. And of course, we've got OPEC meeting today, so we may see a reaction to this. We might ultimately finish very, very strong for the day, or we might find that that doesn't really happen. Looking at US crude as well, was finishing actually a lot stronger, but most of that is a moot point until we find out what OPEC's plans are. Then having a look at carbon emissions. Just noting that we spoke about this potentially being back in the weekly buy zone, and so looking at it potentially finding support. Keeping an eye on this, expecting that to strengthen in the early days of next week. Orange juice continued its trend to the downside, gapped up and continued to look bearish, so currently expecting orange juice to continue to trend to the downside. And then looking at corn, it's pulling back into the sell zone, so I'll be looking, this is a strong rejection, usually indicative of a deeper pullback, but I'll be expecting to find a bearish candle, looking to see this resume next week. The same for soybean as well. Trickle down, now a bit of a bullish candle. So if at some point we do get a pullback into here, I'll be looking for, again, swing trading opportunities to the downside next week. So those are all hopefully offering us some good opportunities in the coming days. Moving on to the global indices, and I'm going to spend a little bit more time on this today because it's a worthwhile discussion here. Continued to move to the downside across the board, so very quickly jumping through the daily charts to give you this to show you here now. S&P also moving down. We're still in a bull market, so we may see these bullish bounces. We had the US tech pulling back into the buy zone again, so it's pulling back down. We've got UK 100, completely disregarding a bullish candle early in the week and moving all the way back down. We've got the Germany 30 just fantastically moving down despite a strong move earlier last week, or at the tail end of last week, moving down. And we've got Hong Kong actually even breaking down to even further lows. So then having a look at these and running through them again from a weekly perspective and going back up to Wall Street, we're still technically in an uptrend. We're still in an area where we can find bulls, but this now definitely not looking as bullish as before. This is significant. So unless we have a strong rebound today and we finish higher today, we're likely to see these continue to the downside next week. S&P 500 fine, that uptrend still intact, pulling back into these previous highs. That one actually looking fine, not a problem if that manages to stay where it is. And even tech stocks as well, or the tech indices, the US tech indices, pulling back down here is absolutely fine. So all of that still looking relatively healthy, but looking at the UK, we're back into the buy zone, back into these previous highs. Will we find support there as well? Again, looking at Germany 30, now officially in a downtrend on the weekly, lower highs, lower lows, looking way more bearish, and Hong Kong as well, now back into these previous lows. So this is all very, very significant. We seem to have a divergence amongst US, UK, European, Asian ones as well. So there's a difference between all of them. They're not all working together in concert. And so we'll be keeping an eye on these. Really just means that we're looking to be bullish on the ones that are bullish and otherwise looking to be bearish on the ones that are bearish. We now have this divergence. Worthwhile keeping an eye on it. They're definitely not all, they're all going through something, and so we need to see what the end results of this is, exercising way more caution than normal. And in our equities in focus and having a look at Tesla, just highlighting here that currently we have a bearish rejection candle. I'm looking at the weekly time frame, back up against these previous highs. So 360 still offering some resistance there. Really like to see how we finish for the day. So this is significant. It just implies that we'd like to see a pullback down to these previous highs in the coming week if we break the low of that. Looking at Apple, we spoke about the idea of this coming back in this week. So on the weekly, doing a weekly retracement, I would again prefer to see this coming in towards 180, testing this previous level of resistance and looking for a bullish candle in the coming week. So far all of this relatively happy. It can still rebound where it is now, so we might have a bullish finish across the board today. Amazon still looking really nice. At some point be nice to see this have a weekly retracement back down to sort of 1600 or 1650. All of that looking relatively normal. Actually, Amazon still looking nice and strong. Facebook also looking nice and strong. Actually, just beautiful move up there. It's convergence, all very happy there. The momentum is looking nice and healthy. So expectation is for the strongest ones to continue. Looking at Ocado, very happy. Look at this really nice bullish reaction this week. Expectation is it's wanting to continue. So if we see a break, if we finish strong on this, we see a break of this, it should continue to move to the upside. So Ocado holding strong, looking really good. So we've got a few good ones: Facebook, Amazon, Ocado, all looking really nice. In fact, even EasyJet is managing to push up. It's got some rejection coming in here, so it's struggling a bit with that 1800 level, but still expecting that to push on to the upside. Alibaba, this makes sense to me. Just kind of broken through new highs, putting back into the moving averages. Likely to see same thing again, potentially a bullish candle next week, unless we finish for some reason very, very strong today across the board. Expecting to see a bullish candle next week and then attempting to resume that uptrend. Rio Tinto doing exactly what we were talking about this week, putting right back down into the buy zone, back down into these low levels. So it's continued to be weak. So now what I will be doing in the coming week, in the next few days or early few days next week, is looking for a bullish recovery on this with an expectation that the week after it will continue to the upside. So that's the expectation there. And General Electric, just highlighting, I'm just disappointed seeing this continuing to move to new lows and not really expecting that to change at any time in the future. I'm noting definite divergence here, but no bullish price action. I would need to see a strong rejection like we have seen on cable earlier today, in the earlier chapter today. Strong rejection of that, and that would then imply that we'd see a bit of a reaction. Not expecting that yet, but there is definitely some bullish divergence there. That's it, ladies and gents. That's a wrap, and I want to wish you a wonderful weekend. If it's trending, we'll be there, and we will chat to you on Monday. Have a good one.